run into fraud in bankruptcy cases?
Absolutely. The United States Bankruptcy Court relies on honesty from debtors. Debtors are supposed to voluntarily report all of their assets, liabilities, and income, and they have to disclose a number of financial details. When fraud is suspected, a forensic accountant can obviously be very helpful in a case.
What happens if you find that a particular debtor is committing fraud?
Well, in the bankruptcy case, the first thing that might happen is there can be a denial of discharge of the debts. And what that means is the debts of the person or business are not dismissed, and those debts can never be released in bankruptcy court ever again. So a new bankruptcy filing could not be done on those same debts, and the debtor must just ultimately end up paying them if it takes them the rest of their lives. Another common outcome when there's fraud found in a bankruptcy filing is that property that would otherwise be exempt could be taken by the bankruptcy court. So when we talk about exempt property, what that means is there's certain property that a debtor is allowed to keep rather than having that asset taken away and used to pay the debts in a bankruptcy. However, if you commit fraud, assets that may otherwise have been exempt may now become not exempt and can be taken away and used to fulfill your debts. One other possibility is criminal charges. It's relatively rare that this happens, but it's intentionally scary. It's hoped that the risk of such severe consequences will deter people from lying to the bankruptcy court.